All right. Well, if anybody comes in, we'll catch them.
Yeah.
We'll hold you guys up. Obviously, this is the home buyer's guide, and I'm up here first. I'm the hype guy for Mike. Just FYI. Not really. If anybody knows me, I'm like really boring and dry humor. So, but Mike did ask me, and I always think it's important as the founder of the company to kind of come in and support, and also, I just think that's good for clients and customers to kind of say, hey, CEO is also coming in and helping out. So, but I always think it's important to discuss who is Priest Capital and who we are and what breaks us apart from other brokerages. Obviously, you're familiar. But what makes Priest Capital uniquely different is the brokerage is it's actually the firm. And underneath the firm is a private equity firm. So that's how we are built, or the structure is we're private equity. And then from private equity, as you can see, we have divisions. So we have a finance division. This is our real estate brokerage division. This is our trading division. And then you have our trading and research division. And then you have the private equity division. So I like to illustrate that because I think that is the founding separation when those guys are just real estate centered and brokerages, whereas here we kind of expand a little bit with our expertise, more well-rounded. So we know, with our experience, how does, these mortgages get collateralized? The secondary market, you know what I mean? Also with the research, the different parts of the data, instead of just soliciting the typical marketing storytelling, the narrative. So more quantitative research than qualitative research. But also what's unique is my grandfather this is 4 generations. Brokerage, basically going back 87 years, or 83 years. My grandfather really started in 1937. My father, Les Priest inside, built and sold a commercial district called Champaign Park. This is all in Saginaw, Michigan. Me and my wife moved down here 2018, and that's when we started Priest Capital. Kind of leaving that whole Michigan safety net to experience, just like you guys leaving, and Myrtle Beach, and then we developed where our business is in Surfside. So 4 generations, because it's my grandfather, my father, me, and then you guys will witness my son. He's in the mortgage business, that's Tyler. He runs the finance kind of division in the company. So when I say all that, that just kind of hopefully gives you guys a little bit more, feeling a little better about the relationship as the brokerage surface level. There's layers and depths of knowledge behind there that you wouldn't get in any other brokerage. The other thing I like to talk about, this is kind of new to, because I'm a data dork. So everybody knows in the housing market, real estate data, that's compiled and given out to the public 30 days. Right? New existing home sales, any of these pendings, if you've been a realtor, and obviously I know Dee, you kind of know a little bit behind the scenes on the real estate. So any realtor across the board gets the mortgages, you're gonna get MBS Highway, right? All the mortgage loan officers get MBS Highway, right? So if you're out there and you're talking to consumers, everybody's getting the same stuff that doesn't really bring any uniqueness to yourself or your brand. And so what we did is we pulled the data from the MLS Weekly. So if you guys pull out your guys' booklets, and you guys can take a snippet of the QR code right there on the front. This one right here. You guys snap that, you guys will see in real time So the weekly data. I'll let you guys kind of pull that up. And again, you guys have laminated sheets so you guys can kind of, but we've really broken this down, and the reason behind this is things that we always like to say is there's three big questions in the real estate industry that you'll get from consumers. They'll always ask, hey, what is for sale? What's my house worth? And what's happening in the real estate market? And a lot of times people can obviously answer, any agent can answer what is for sale, right? We can all look on, when people ask like, hey, what's my house worth? Any agent can do a CMA, and you can pull comps, and you can easily find like what your house is worth. The one thing is that people can't is what's happening in the real estate market. So when you ask people what's happening in the real estate market, you're gonna get a couple different answers in just the way that my engineering brain works. It kind of bothers me because I always feel like, or what you hear on your local news channel, or what your broker might tell you, but nobody really knows how to define and answer that question, what's happening in the real estate market. And so what we did is we did quantitative research, so we did data analytics, and then we came out with this. And if you were touching this, or D, you can see this is the solutions to help communicate what's happening. So a couple little easy things that we did is the market action index. This tells everybody whether it's a buyer's or seller's market, right? So boom, really easy to kind of, in a very simplistic way, right? Almost looks like a gas gauge. You can kind of see like, hey, is it a buyer's market or a seller's market, right? So when somebody says like, hey, what kind of market is it? Answered by data, not by a story. 30, so we back tested. This is a proprietary index. We back tested this and looked throughout time in the past. And where did we feel there was a balanced market of supply and demand in the market for where there was an equal footing for both a buyer and a seller in that index that we came out with 30. That's why you'll see like 30 is kind of, there's a gap there in the line. That's a balanced market. Anything below 30 is a buyer's market, right? And more supply, less demand, buyer's market. And anything above 30, as we back tested this index, gives, when you also look at prices and everything else, anything above 30 kind of gives it a little edge or tilt to the sellers. So we've answered that question in what's happening in the real estate market by an easy infographic, and then that gets updated weekly. So you can watch on this on a week to week. You don't have to wait 30 days to what's happening and have it be some lagging. Also, when you look at that, on that, I don't want to call it an app. My wife's like, oh, it's not an app, but it's a site. So we created a site. But also, you can see there's spark lines as you scroll through that. All this stuff is interactive. If you hover your finger probably over one of the lines, those spark lines, you'll see days. You can, right? So you'll be able to hover your finger, right? So you can go back. You could say like, all right, well, and that's weekly data. This goes back, those spark lines go back 3 months. So it's relatively, right? There is historical data that you can see, but it only goes back 3 months. But it's a simple way to see on a week-to-week basis what's happening in the market. If you scroll down further, because that only gives you 3 months of data, I can go back farther into 5 years. So then you can really expand it out. And again, to make it easy, it's 7 days, it's weekly, but then because weekly data gets noisy, we also did put a 90-day average to smooth out the lines. It's because when you're looking at data, it can get noisy week by week. And so we did a 90-day average, and then that smoothed out. So there's 2 lines on that graph, you can go back 5 years. So then you can really capture the historical, like, what's happening in the market. Not a story. Grandma didn't tell us the story. You can actually see the real data. And this tells a story. Math never lies. I always tell people, math is the only truth teller. So So we've created this. Now, the bottom section, we've even taken a step further, where we said, okay, that's great, Jay, and then we've taken it where market segment. So maybe, you're in a neighborhood that's like on the lower side in town, and so your neighborhood or that price point is gonna act differently than, if your house was $2 million, right? If your house is $2 million, you're gonna have a different set of buyers, and it's kind of like a different set of market than if your house was 150. And then we also break it into the middle, right? The mean. So a median house, 300. So we actually broke it up into 4 segments. So 4 quadrants. So we took the lowest. So in an area, in a zip code, what's the lowest price on the market? What's the highest price on the market? Divided it by 4, and then put everybody grouped into 4 quadrants into that price range. So we priced it in segments based on price. Because, again, the high end acts differently than the low end, which acts differently than the middle end. So we've also done that. So it's basically an all-encapsulated, roundabout, easy way to tell people, hey, this is what the market's doing. And, right, you won't find that in any other brokerage. Like, Really One, Century 21. So again, as clients, agents, anybody that works in the firm or works with us, that's that extra edge that you have. So if you're gonna go put a purchase agreement on a house, you kind of have this knowledge of like going into it, what kind of market it is. And it's that confidence of knowing instead of speculating or anything else like that. So, as well as if you're a seller. And then you can kind of track that week by week, right? And see what direction that it's going in. Because, right, is it trending higher or trending lower? Where you might want to be a little bit more tactical in timing. So we found that this was a very unique tool to Priest Capital that not only is nice for the agents and anybody in the mortgage industry, anybody that kind of works with us, but also to the clients. So we always like to showcase that. You need to write that down. That was the thing that you would write down. It's what actually happens. So, and again, not to kill a dead horse, we developed that system gathering local data about what's happening in real estate. So we track it every week. With that, I'm going to give it to Mike and let him tell the rest of the story.
Thank you. You're just going to reset it. All right. Set the video now, so just give me 1 second. Yeah. All right. Hello. Welcome. Well, glad you're here. Yep. I'm Mike Ortega. Okay. Myself, I've been doing real estate for about a year, a little over a year now. Before that, I was a New York City police officer and detective. I was an analyst. Did a lot of video and data analysis for the Navy. I was in the Navy 94 to 1998. I got out, and then after a few years, I decided I missed it, and got back in and joined the reserves, and became a Master at Arms, which is military police work for the Navy, and retired just last September as a senior chief. So, as far as education, I have a bachelor's degree. I also went to the Senior Enlisted Academy in Newport, Rhode Island in 2019. That was an outstanding time. I didn't think I would, definitely. Right? So 6 steps to buying a home, okay? Step 1 is you're gonna complete the loan application. You're gonna look for a lender. You're gonna provide income and asset documentation. So those are your W-2s, your 9 forms, your paycheck stubs, bank statements. You're going to get, once you do that, you're going to get a pre-approval letter and share it with your agent. And then you're going to review, step 2, review your pre-approval with your realtor and discuss your purchase options. Right? So once you're pre-approved, okay, I want a $3 million house, but it turns out you're only pre-approved up to $350,000. Then everyone knows, okay, we can go there. Let's look at houses for $350,000 plus. Formulate a plan to see the homes that fit your budget and your needs. right? Sometimes people say they want a very large house with a lot of room. They want 4 bedrooms, plus an office and 3-car garage. And then when people come into that house, they say, you know what, maybe 5 bedrooms is a little bit too much space. What if we got a 2-car garage instead? What if we had a 3-bedroom? And sometimes the gourmet kitchen is a little too big, so it can tighten it up a little bit. Step 3, start your home shop. Stay focused, don't get discouraged. Always stay in contact with your realtor and lender. Don't engage in any large spending or obtain credit during this time. When my wife and I bought our first house, it was a two-year journey, 2.5-year journey. So we started looking in 2008, and we finally closed about December 2010. We saw at least 3 or 4 different realtors. This was right about when everything had that big gigantic crash during that time frame. And we wound up sticking with a really great real estate agent, Jake Navigation. So he explained everything, walked us through everything, and took the time to pick up my wife from the train station, show a few houses, and I was gone at the time. And then when I came back, found a house and we closed on within 3 months after that. It's 2 years, so it's a long-term investment. Step 4, work with your realtor to make an offer. Review the offer with your lender and update your pre-approval letter as needed. Submit your offer with earnest money deposit. Order appraisal and property inspection. Collect all the updated documentation. Acquire homeowner's insurance. Loan reviewed for final underwriting. Step 6, receive a final loan approval. Review final closing statement and coordinate with lender. Attend closing, sign documents, and get the keys to your account. Write this down. Right?
You forgot to say anything like that.
You forgot to So you get on the phone and you're like, oh yeah, write this down. Okay. But now I'm not. Okay, meeting with a real estate agent. You're gonna meet probably at least 1 to 5 real estate agents. When I first looked for my first home, we saw at least 4 or 5 different agents before we finally settled on one. Showed us a couple of properties. Sometimes a lot of it comes down to personality types, right? And sometimes the sales tactics that they may or may not use, right? And some people you just mesh with, you can have an actual easy flowing conversation with. One, for instance, when we started looking in 2008, it was a short sale, and we took a look at the place and it was falling apart, right? But it was still high 5s, somewhere in Queens, and he was telling us that we absolutely needed to buy the place, right then and there. No, thank you. We're not going to do that. And then we wound up waiting. We saved about $200,000 in the short sale. Discuss the type of property you're looking for: bedrooms, bathrooms, how big of a lot you want. Inform the agent of your planned budget for the maximum price. Is there a particular town or type of home you want? If applicable, how far you want to commute to and from work. Some people don't mind commuting an hour and a half, 2 hours, depending on where they live. Like some people, I've met people since I've lived here, and my wife has, where they commute to Florence or Columbia, and they have a business here, so they're driving an hour and a half, 2 hours every day. Or a professional agent will listen to your needs and requirements and should offer constructive feedback on the market. The real estate agent's there to help you, right? It's not just to make the sale, it's actually make sure you're getting what you need, right? So that's the point of representation, is understanding your needs and wants and saying, okay, let's see what we can find there for you and get you the best possible. Choosing your real estate agent. You may need a few different real estate agents, as I said. Want to go through 4 or 5, maybe 1. You'll choose one that you think best suits your needs. If If you sign with them, they're your agent. They're not only there to help you find a home, but they're there to trust and act on your best interests in finding a home. You and the agent will negotiate for the agent's commission, retainer, or fee. This may be negotiated as percentage of the sales price of the home or a fee. Once you and the real estate agent agree to the terms and what you're looking for, they're your agent and will work to help you find what you're looking for at the budget rate. That's what they should be doing at all times. Once everybody finds out, there's really no point in showing a client something that either that is way out of their price range or not where they really want to be. Right? Getting pre-approved for a mortgage, find a mortgage lender that will give you the best possible rate. Gather your pay stubs, your W-2s, your 1099 forms, your bank statements, and this will help determine what you can afford. That's very key to getting the best possible deal. Search for a home. Okay, what does your agent do? Okay, your agent will do advanced searches of the area of properties for sale that match your criteria. Then they'll coordinate and confirm availability for appointments for you to see those properties. It's done through showing time, or if you see a particular property on Zillow or somewhere else, you say, hey, I'd like to see this, or BotegoProperties.com. You say, oh, you know what, I like this one on 123 Main Street. What do I do? Continue to search for a home and update your criteria on what it is you're looking for. It can change, right? Provide updates and feedback from listing appointments. Provide valuable feedback to your agent. Not only helps your agent, but the listing agent in the sale of the property. Hire an attorney. Find a lawyer who specializes in real estate to help you close and help you negotiate the terms. That's very key sometimes. I had a lawyer for my first house. She is actually a friend, very helpful in also working with the real estate agent to negotiate the price. That was key. Time to make an offer when we finally find that house. When you decide it is the right house, the right time, the right price, tell your agent you want to make an offer. Your agent will prepare your offer and terms and communicate them to the home seller. Very important, manage your expectations. It's possible the offer could be denied. The seller may not want to sell you at the offered price or the terms offered. Though the seller may not accept your initial offer, they may make an initial counteroffer. So, an example would be if the home is $275,000 and you really want the house and your initial offer is $260,000. They may reject it. They say, you know what, we really want $275,000. But they talk to their agent, there's some negotiation, okay, there's a problem with the tile in the bathroom, there's got to be some drywall done, we're going to spend $1,000 on paint. Can you do $270,000? That's generally how the deal is. Negotiate. Your agent should communicate to you what the seller's intentions are. Strategize with them on whether or not a counteroffer will be made or an offering of the different terms for the sale. With your consent, your agent will make those negotiations in good faith to possibly arrive at it. Be patient. Your agent will communicate with any updates. Contract. The offer was accepted or negotiated. The contract will be drafted and sent to you for signature. This will either be done by ink or electronic means. Within the contract is the agreed upon price, the estimated timeline to closing, as well as the rights and responsibilities of each party. You may have to give the seller a sum of earnest money that will be held in escrow. On the contract, the home is now considered under contract as pending sale. The home is held for you until closing. Details before closing. Before you go to closing, there are still details to work out and actions to be taken. Making sure you complete these tasks helps you to ensure that the closing will have as little stress and complications as possible. These details are tasks such as finalizing your mortgage, communicate with your lender and provide all paperwork requested, review the terms of the mortgage, due diligence, property inspection, perform due diligence on the property, make sure you look everything up, conduct a property inspection, hire a property inspector, go through the property yourself, review that paperwork. It's worth its weight in gold.
Well, figure it out.
Yeah, I think so. We'll do it the old fashioned. Okay, find a moving company or truck rental. Find a reputable moving company if you needed to help you transport your personal property. If not, research the best size and type of rail van or truck you may need for your property. Buy packing materials such as packing tape, bubble wrap, boxes. I can't, for someone that moved down here and got robbed, for lack of a better term, they not only adjusted the price several times, but they held our goods more or less hostage when they came across as reputable over the phone. I'm not going to give their name, and they demanded over $1,000 in tips, and then they held all the property in a warehouse in New Jersey for 4 or 5 weeks. And when everything came, we were missing about $25,000 worth of stuff, and some of our stuff was broken. Filed an insurance claim. The insurance adjuster with the third-party arbitration said we're not going to cover it. And then we went to law enforcement. Since it occurred in different jurisdictions, no one really wants to take the complaint with them. Because they picked it up here, it didn't occur there, did you see them take it here? No. Well, where was it? It's a warehouse in Jersey City. How do you know they lost it there? Or lost it anywhere from New Jersey? At Myrtle Beach. And that's, if you look things up, they might sound reputable, they might sound really nice over the phone. Make sure they're an actual moving company, not a broker. That's one of the things they presented themselves as was a moving company. It turned out they were actually a brokerage. A brokerage is somebody who says, hey, I got this job here. Who wants it? So whoever has a truck or a trucking company within their dispatch region, they can pick up the job for X amount of money. And they got it. So you're saying you're XYZ moving company, but you're actually a brokerage. So you have this and you put it out for bid, and everybody says, okay, so ZZZ moving company takes it for the lowest possible price and they give it to them. Right? Okay. Yeah, oh, you got to work here. All right. Communicate, talk to your real estate agent on a regular basis. If any barriers or situations arise, inform your agent to manage and negotiate on your behalf to facilitate the closing. It's extraordinarily stressful to relocate, to move, to put all that money on something, and there's a very big leap of faith that's going on with a large amount of money, because you're like, well, is this actually going to happen or not? You're never really sure until you finally get to closing day and you're signing the paperwork. I'm just speaking from my own experience twice. The first experience, just coming off of deployment and trying to get a place to live, and after the housing crash of 2008, 2009, when we finally get the house, it was a long time. Coming down here, even though everything was lined up just so, it's like, well, any number of things can happen, right? So let's get there and make sure it happens. So constant communication with the real estate agent and talking to them and expressing your fears, frustrations, and everything that you have is important. They're not just there to facilitate the business deal. They're there to kind of calm you down a little bit sometimes and express those fears to the seller, the listing agent, and say, this is what my client's concerned about. Closing, this is a legal transfer of funds and ownership of the property. The attorney or title company will facilitate the closing and ensure all documents recorded in public records and that the transfer property deed are now in your name. Okay, and lastly, finally, move in. Now the closing and transfer of the ownership is complete. Property is now yours, and the bank's, and it's your home. Proper congratulations. It's an outstanding journey.
Again, my name is Tyler Priest with Newman Mortgage. I didn't really have a full slide dedicated to some of my experience of where I've been, so just wanted to just kind of put that out there a little bit. I was fortunate enough when I was younger to go to college at a much younger age than what most would probably deem as appropriate. Started at age 13, went in for a bachelor's in econ with a minor in finance. Once I got out, we moved down here in early 2019. It's about 16 years old. Can't really do anything. Government doesn't let you do anything with money, real estate, finance, anything like that. So what does anybody do down here? Restaurants, hospitality, anything like that. So I started off as a busser, worked my way. I love helping people, so kind of once I was 18, able to cook. Slowly found out that wasn't really my niche. So very soon after, started taking my mortgage license exam, or getting that handled. But then also I started coaching at a couple of gyms. So it's something that I even still do to this day as a little side gig. Again, love helping people, whether it be getting a new home and just their overall daily fitness life in general. Today I'm here, appreciate Mike allowing me to speak along with mortgages, kind of giving you guys a bit of mortgage 101 as far as terms that you guys may not know, as well as just kind of some tips that kind of helps yourself or clients of yours through the process. So I'll kind of go over today aspects dealing with credit, income, and assets. Those are, I'd say, the three main aspects of getting a mortgage that many people get hung up on. Right, example of what credit is essentially comprised of. 35% of your credit payment history, or your credit score is comprised of your credit payment history. About 30% is actually credit utilization, right? You have your credit cards maxed out, or you're only using $100 out of your max $1,000 credit card, right? New credit, mixed credit, they involve the least amount as far as how they contribute to your credit score, as well as the length of your credit history, right? You just starting out, or are you about 20 years in, right, of building up your credit? Right, out of the audience, do you think that a lender cares how long you've either owned your business or how long you've been employed? Raise your hand. No?
I don't know.
You don't think they do?
No.
I'd rather beg to differ. Because there is a difference if, right, so at a lender, whether it be rates, a mortgage in general, right, qualifying, right, there's a lot of risk that they're trying to factor in. So if someone has worked for a company for 20 years versus worked for a company for only 6 months, right, there's a higher risk for the one who's only worked 6 months versus 20 years. So there's a bit of that. Now, lenders, the golden standard in the industry is 2 years. So we usually like to look at, right, are you W-2 employee, self-employed? Right, those two main, for what's on the board here. Those two, right, 2 years minimum of a work history for a given company or rather industry. Right, you can change companies usually, but it has to be within the same job that you're doing. Right, you could also, as far as income, right, we have non-employment income, retirement, disability, child support, as well as rentals. and then also your asset depletion as far as income goes. Now, there are some programs that we can allow for less than 2 years. For example, like a bank statement loan, those are more for your investors. But usually there has to be other compensating factors to kind of offset that risk. This is more or less along the, again, the income side, obviously. But a lot of times people don't know what DTI is. It's a pretty important factor when it comes to mortgages. Your DTI stands for debt to income. So your debt to income is your overall debt in relation to your gross income levels. What debt may you think is comprised of that? So there's two main, I'll get into it shortly, but there's two main DTI calculations that we use, right? The first one is mainly comprised of this first, the housing expense here, whereas the second one involves both the housing and the other. So dealing with the housing expense, right, you have your principal, your interest, your property taxes, insurance. If you're putting less than 20% down, you have a private mortgage insurance on top of your regular homeowner's insurance. And then of course, association, if you're, especially around here, have homeowners association dues, right, those are as applicable. Your other debt, right, you have your car loans, leases, that also includes, right, like anything, boats, RVs, motorcycles, right, anything that is more or less a vehicular loan. You have your credit cards, student loans, other mortgages on properties that you may have, as well as alimony and child support, right, if you're paying those out. First, DTI ratio or calculation that we have is called a front-end DTI. Right? Again, this is the monthly housing expense divided by your gross or usable monthly income. Right? This ratio is not used as heavily, I'll say it's important, but it's not as important as the next one. Next one, right, simple, back-end, front-end, back-end DTI, right? The back-end DTI, this is the biggest factor, or one of the biggest factors when it comes to qualifying for a loan. Right, it involves your housing expense plus all your other monthly obligations. Current DTI limits. So as you can see, like conventional as well as VA, they don't have limits on the front end. It's typically not as not necessarily as important, but it's not usually a big factor when it comes to qualifying for a loan. The back-end DTI limits for conventional loans, you have 50%. FHA, you have 43% with a credit score below 620, right above 620. We can get away with 50, and if there are other compensating factors, we can maybe push that. Usually it's 50. VA, right, again, it's about 50 or so. Usually the golden standard is DTI is max about 50. If you have compensating factors to kind of offset that risk, we can push that a little bit. Again, with USDA, 41% or 44% with a less than 22% on the front end, back end, or front end DTI, sorry. You may be asking, well, what's the lowest down payment, right? First time home buyers, anything like that, what can we get a house for, right? What do we got to put down? VA and USDA, you got options, right? Put nothing down. FHA, 3.5. I'll kind of go into one of movement mortgages, down payment assistance programs for first time home buyers, actually, as well as repeat customers, repeat customers, that we can bring that FHA down to 0.2. Conventional and primary, 3 to 5%, right? That 3% is only for first-time home buyers. I may not have alluded to this before, but the first-time home buyer is designated, or a term designated for those who have not had a home in the past 3 years. Right? So if you owned a home less than 3 years ago, maybe you've been renting for the last year, technically you're still not listed as a first-time home buyer, right? You dropped that house 5 years ago, now you're back on. Right? Conventional, second home, 10% conventional investment, 15, 20, 25, depending on your credit score. All right. Jumbos, and you can also get those for 3.5, right, 3.5% down. All right, lastly, moving on to assets. All right, assets that we use a lot, right, go anything from your checking, savings accounts, retirement accounts, investments, right, gifts or gifts of equity, right, those are also included, crypto, cash on hand, right, something for cash on hand. True or false, lenders don't care about my cash deposits.
False.
What do you think? Yeah?
True.
True? Actually, it's false.
Oh.
Close. Nice 50-50
What
shot.
is that, 2-0?
2-0.
Who's tracking? Sorry. No, so lenders, the only reason that we care, or I shouldn't say the only reason that we care. We care, right, only if it's less than 60 days. What I mean by that is if cash has to be seasoned for longer than 60 days for us to be able to use it towards your assets and towards your down payment. So if you were to deposit $5,000 into your checking account after we already started the mortgage financing process, right, we'll have the underwriters come back to us and kind of ask, like, hey, where's this cash come from, right? They don't know where it's coming from. They have to track it somehow, somewhere, right? When we have consumers start the documentation process and gathering documents, we often ask for the last 2 months of bank statements. So anything prior to that, right, it's assumable that that was already there. So I need at least 60 days for those cash deposits to be able to use towards assets, towards your down payment. Again, your mortgage payment includes, we like to say the term that we use in the mortgage industry is PITIA. Essentially, for your principal and interest for the loan itself, right, your taxes, property taxes, your insurance, homeowner's insurance. The A, that's just your HOA, right, as applicable. Not everyone has an HOA. Around here in Myrtle Beach, you have a plethora of options in regards to communities with HOAs. Right. Also, something that to keep in mind during the process is whether or not you escrow those for your taxes and your insurance. Having an escrow fund, right, during the closing table, you basically pay and the lenders, they create an account for you, right? You have funds put into this account. The lenders can't use it, you cannot use it, but it's paid for you. The taxes and insurance are paid for you for 1 whole year, right? While you're getting yourself settled in, right, into your new area. As well as, like I said, the PMI, private mortgage insurance, right, that can also be included in your mortgage payment. That is, if you are putting less than 20% down, that's pretty common. I believe this is the last true or false, so we'll see if you get this one. True or false, all first-time home buyers can get down payment assistance.
Trick question.
It is a very true question.
False.
That is true. Yes, that was correct. So the trick here is all first-time home buyers, right? So you still have to qualify for the loan or for the first-time home buyer program, and or if you are trying to get down payment assistance or your client's trying to get down payment assistance, they still have to qualify for that as well. So just because they are first-time home buyers doesn't necessarily mean that that automatically, right, puts them in that area to qualify for what they're looking for. 1 and 2, gotcha. All right, for that down payment assistance real quick, just kind of throwing this out there, this is one of a plethora of down payment assistance programs that are available. This one for Movement Mortgage, they have Movement Boost. Boost is essentially, again, a down payment assistance for first-time and repeat home buyers that for an FHA loan, all right, They will roll the 3.5% of the down payment into the loan, as well as they have two different versions. So they have just the 3.5% part, but then you can also, they have a second part of the program, which is you can also qualify for the 1.5% towards your closing costs additionally, right? So it would be a total of 5% that you're getting instead of just the 3.5%. Right, that is just one of many, right? This one is provided by Movement Mortgage. Lastly, I'm not going to read this entire thing, but these are just some do's and don'ts, right, of home buying that we see often, some of the biggest things, right? Don't go out and get a new car while you're trying to get a mortgage. Don't go out and, pull out $50,000 out of your credit account, right? We're gonna have to know what that's for. It's not good for everybody, right? It's gonna frustrate you as a client, right? Keep all of your accounts, basically, right? When you're getting a mortgage, try and keep everything the same as it was, right? It's only 30 days, right? You can, 30 days of just, right, get the process, let me do my work, right? And we can get that home for you. All right, I think I may turn it back over to Mike if anyone has any questions or anything like that.
No?
At the moment. No. All right.
Good job.
Thank you very much. Yeah, thanks to Jason. Tyler. Hope that satisfied any questions that you had as far as just how to go about the process of purchasing a home, especially if you're a first-time home buyer. And we've been here a little over a year ourselves, so we've been here. Do you have any questions?
Yeah, but